Hello guys and welcome. I'm gonna break down the PA for today, why I took my shorts and why I was not interested in longs. So starting from the beginning, we had Asia dropping lower, coming to 1 hour rejection block, and then we had an immediate rebalance and price start going higher and higher. If you notice here, we didn't just sweep the Asia high, we also broke structure to the upside, so a continuation move to the upside. And then what happened is we start accumulating, generating equal highs, not randomly. Then we came down to 50% of the range, 930 opened, came down and then shifted structure. We had a breaker, price start heading upwards, and this move upwards was too significant, not real retracement. The price wasn't balanced properly. And why didn't I take the longs here? The reason was that in a bigger time frame, like bigger scale, I was looking at this as a range and I was considering price trapped in that range. So I was expecting price to, if it goes higher, the profiling matches, so I will look for shorts. But if it went deeper in the discount, then I would look for longs, just to take maybe the London higher. So price start moving upwards. As we said, it didn't have a clear retracements. So what happens here? Like we broke, we start heading upwards, and then if you see here, I mark my standard deviation, my projections, which it was at 2.5. Price took the yesterday highs I was targeting eventually and previous day high. So we put a low at the macro time, 10:10. So it was the last low we put in that macro. And then we start making few gaps going higher, which this is where I wanted to pay attention. I wanted to see these gaps getting filled, getting balanced, so I can start putting my short positions. I get filled up here, and then I had in my mind two considerations. One was I wanted to see this 10:10 macro low getting taken. This will confirm me more prices going lower. Another thing is, if you view that in a bigger picture, you can see that it could be an MMXM, right? So we have the buy side of the curve and the sell side of the curve. Second thing I had a theory of, it was that price has to retrace, because it didn't do that before. It's a lot of unbalanced gaps and price range. So if price has to retrace, either it retraces or reverses and comes back into the range it left at 930. It's the same thing. It should come down. So what price did, started to head downwards. I was waiting for 1030. I wanted to see 1030 pushing a bit lower. So if we go to 1030, it started to initiate this move lower, which is kind of the first most clean structure shift going lower. So you can see the bodies breaking down, and then price retraces back into this other range now and start heading lower again. So now you start getting confirmations that, oh, we are balancing the zones above and we are heading downwards, especially when we took the 10:10 macro. So all these highs that we generated there, I didn't see them as, okay, it's a point that it might be a liquidity, so price can go there. I just see them as protected highs, each one of them, when we fill up the ranges. And then we start heading lower. And here is the macro at 1051. We break this high, we tap into this high, and we go lower and lower. And I start exiting positions here. And when we reach it here, I said that this is the zone that I'm hands up. Like it's everything I wanted to see, it already happens. Everything else will be extra for me, because from this zone you don't know if it's gonna be that was the retracement, so now price wants to go higher, or it's a reversal, so it wants to go lower. So you need to track the price. Tracking the price, you can see that we start going lower again. So I start exiting more and more because I wanted to also get out and end up the video. It was my last positions also. And then we came back into the range we left, okay? And we start heading even lower. We went to the midnight open. So this is an MMSM. As you can see, we had the buy and the sell. And if you connect the order blocks, you can see here we have one here, okay? And let me mark it out for you. So we have one here. We have another one here. Okay, so in a market maker model, you can see that we break down, we tap, we go down, we tap, we go down, and then vice versa. We keep doing the same thing. So you gotta pay attention to your left side and see how price is reacting to previous order blocks or important levels, important gaps. So yeah, that's it. I hope I cover up most of the things. The rest you're gonna see in the video. Be a bit patient because it's lagging a bit. I had a problem with the recording program, but I fixed it. So from now on, everything will be clean and good and smooth. So take care, guys. Until next time, peace.